Hey everyone, thanks for joining this episode of Sound Bites. Today we've got a really great guest, Jason Feimster. He's the managing partner of Moonshine Capital. Jason's got a really interesting background. He's a veteran Marine, spent a lot of time in the financial services industry and venture capital, general investing, a lot of interesting stuff. Really excited to hear your story today. Jason, how you doing, man? Thanks for joining us.
I am living the dream.
We got so much background on that statement. No, I'm really happy you're here. Really glad you could join us today. We've been trying to pin you down for a little while now. We had a good conversation, man, almost a year ago, and been dying to get back and touch base again. So let's just jump into it, man. Let's talk about your story. How did you get to where you are now? What does that path look like?
Where do we start? Okay, when I was born, and I'm kidding.
Born at an early age.
Born in the year was 1770. Anyway, actually, way I got here, and thank you for the introduction. First off, I'll say that I came out of the Marines in 2010. I was in D.C., and I had an ego that would not accept any offers that I was given. So I stumbled, and that is the correct verb or something they're similar, into finance. And by that, I mean I had to get some job. And luckily, a equity firm here in the area, an investor said, essentially, why don't you be my lackey? That was not the exact term, but that's what it became. And the 13 years that it followed, 12 years, 2012, I can't do math. In finance, you don't have to do math, I guess. I'm terrible at it. Anyway, I've gotten here, and the succession from where I started in basically finding leads for an equity firm to where I am now as managing partner at my own firm is great people. Essentially, I know it sounds kind of generic, but every firm that I've been with, whether I've stayed with that particular firm or not, I've had some powerhouse people behind the curtains in finance that have either taught me something new or it kind of said, "Hey, Jason, you're completely on the wrong rail. You're on the wrong track. You're probably going to go broke. You should probably pivot, and this is how." And thanks to those people, I'm here now. And I'll summarize and say that my time in finance, it started like I've mentioned in equity, which, to give anybody listening kind of a ratio, we listened to 1,000 startups the first year, and we maintained that pace for 4 or 5 years that I was there with that firm. We invested or gave an offer to 9,
Wow.
and from 1,000 down to 9. What I want people to hear is, and what I realized is there's a huge gap in between what equity actually invest in versus what, that generates that leads for 1,000, what people think equity invest in. From there, I moved, because I'm naturally a yes man. I didn't know that. I don't like to say that. I don't know if that's a compliment, but in that I had to say no a lot of times. And no to a lot of great companies. For one, companies that, you could make $100 million. If you're not making $100 million a year in year 3, don't even try. Kind of generic advice. That's terrible. Yet how many great companies, could be 50 million a year, 20 million a year, still great companies, put food on the table for many people and create many jobs. So therefore I pivoted to debt, which is more of your lending, traditional type, it's like term loans, equipment financing, etc., so that I could say yes more. What I found there, and where I'm currently at, and trying to pivot or trying to change, is in my high level, I like to say that I'm democratizing access to capital. I'm not quite there yet, probably a sliver in that direction. But again, to say yes to people that marginalized groups that don't have access to capital, as whether VC and private equity has their skeletons in the closet, and a large will say no, meaning you won't get financing. You come over to debt, you find the exact same scenario, but you say yes more, but you're saying yes to the same groups that 10 years ago, 20 years ago, 30 years ago, we were saying yes to. And the data, there was interesting data from the Fed that validated this. It analyzed in lending through COVID, and what was interesting was you hear all these buzzwords like Fintech, and you think that there is innovation happening within finance. And I'm going to take a unpopular opinion and say there's absolutely not. The same groups that were getting the same people that were getting money in 2020 and 1990 and 2000 and 1980 are the exact same people that are still getting finance. And unfortunately, to alternative finance, which is where I'm at now, it's nothing's changed. The banks are still the number one go-to. They still finance more people than alternative finance, and maybe not directly on the face. That's changing. And players like myself trying to spin that, but at the end of the day, we're trying to democratize capital. That's how I've got here. Great people, one finance company to another. And I've kind of, like I said, summarize here my long-winded, verbose introduction. I went from equity to debt, and what I've learned is finance is finance.
I feel like I have a ton of questions, so I want to. There's so much to unpack there.
I'm actually I was like, oh my God, they're going to ask questions. I'm not going to have to answer.
Oh no! They're all about you. So I think you're the expert.
That's my worst field.
All right. Well, I feel like you can answer this one. So when you were working in equity, you said that there's a vast gap between what people think would get investment and what you would actually invest in. So what is that misconception, and what should people be thinking about when they're asking?
Not large enough. And why now? A lot of entrepreneurs, they have their babies, their startups, and they're very personal with them, and that's pretty much the whole field, and it should be. However, what our go-to denial was based in was one of two things: wrong timing. You couldn't answer the why now, and you're just not large enough. There's not large enough room for equity investors. As I said, I gave a loose line in the sand, and probably many other investors will shoot me for saying this, but if you're not 100 million, if you're not projection, if I ask you if everything goes perfect and your go-to-market, your problem solution, you're solving an actual problem, and as I'm getting to, that problem's probably not big enough, or you're not able to capture a big enough market in time for an equity investor. But let's say everything goes perfect to your plan. And I ask you, you look at your 3-year projections and you've got 20 million or 10 million. That's where do you think the equity investor's room is? There's no room. They're going to make marginal returns. So at best, marginal returns and wait 3 years to do it. I think that undermines the element of what investors do, which I'm going to speak it to. I'm going to go abstract to answer your question too, and say that investors are investing. They're in it to make money. And I don't care if you're solving cancer. I don't care if you're making organic tampons. I don't care of the social value. All the investors I'm aware of, they are in it first and foremost to make returns. Now, in that industry, it is specific that only one, will moonshot and will cover the rest of the portfolio. However, they aim for every single one. And I think that is a big misconception, or I don't want to say a misconception. I want to say that there's no education there. It's your $10 million a year company in 3 years. That's not good enough. 20 million a year. That's not good enough.
I think another hole that people have on a similar note is they don't understand how a fund works. They don't understand that a fund has a beginning and an end of its life cycle. Right. And if you come in at year 7 and you try to cash that out, that year that fund might close in 3 years, right? You're not going to get a second round from it. And so I think that's another hole that people don't fully understand about the VC space.
Eric, I would like to do a study on my own. I'm not going to. It's one of the things you just say I'd like to do, but I'm not going to. Is the company, so taking my own numbers, and from 1,000 interviewed, pitches and presented to us, and giving an offer to 9, that's what is that 1% of 1%. I did somewhere around there. It's not a big number, but then take those that get their first round. So of those 9, and cumulative each year, that will only get that first round. And when they go to get their, they'll get paraded around by the VCs. They'll get paraded around. Go to all. They might get a mention in TechCrunch, but then they go and get that Series A. As you mentioned, their fund closes, or they don't have which is the majority, don't have a long-term plan for funding. They're not able to get that second round. One is the mass growth, and this goes back to the previous question, the massive growth that is required to meet private equity and VC metrics. It's insane. You have to literally go like on your little scale, go straight up. I mean, it's insane growth that most companies will not maintain, nor should they be expected to. But my point is the chances of even getting that second round are even slimmer than the first round, and that leaves so many companies out there high and dry to the point. And here I'm going to say an unpopular opinion, that I think VC and private equity is the drug dealers. They're the crack. It's crack, because the minute that they don't get that second round, well, the companies are left just like an addict without their dealer.
Yeah, like especially if they've been sold the story, hey, get growth right now, worry about margin later. We need market share now. And there's I'll keep them nameless, but there's a company here that started growing really, really quickly that was funded. It's still funded by VC money, but they use that capital to build a really nice building. They have really nice resources, stuff like that. And then they hit a wall and they're letting a lot of their people go, right? So
that's
they
exactly what I'm
running out of cash.
Exactly. You got a firsthand testimony.
It's tough to see, really, really tough to see, because like the potential is all there, but they end up getting in that trap of, oh, well, let's get another round. We'll get a follow-on round. We got enough growth right now. But then their next valuation, COVID happens and the next valuation isn't as high as the first one. So they end up in a sticky spot. It's pretty tough.
Sticky.
Are there
Another
certain industries?
I hear founders say is they fund to fund. They're like, if we get this first round, that'll allow us to get the second round. It's like, so you're funding to get funded. It's like, that doesn't sound attractive to any investor.
Are there certain industries that are better suited for PE or VC where they can continue to see those returns and get more funding?
See the scholastic question. I would like to say, in theory, yes. And I'm sure the answer is yes. I'm not aware right offhand. All I can say is it depends on the fund and depends on the firm itself and their current interests. You want investors that to invest in lanes that they have ancillary value or secondhand value, and that they can open doors, they can do tangible things, which most do. It's just by default. You don't invest in outliers.
Right.
Though I don't know the answer right offhand, I would like to say yes. That yes, there are particulars, and it would have to do with know who you're investing in, know where that money's coming from, and what they back.
Yeah.
And to that point, what have you seen? What have been the elements that have generated the most successes in that in your history? Like, what have you looked for that's like, hey, this looks like it's most likely going to go someplace? Is it the team? Is it the founding team? Is it the way they're managing capital currently? Is it the idea itself or the problem itself, or just a combination of all of them?
A mentor told me, speaking of those great mentors along the way, one told me, invest in a shitty idea and a great team invest in a, I don't even know how it started. Let me back up. Invest in a shitty idea and great team versus the other way. Meaning it's always, if you simplify business, it's a byproduct of human labor. So know who the humans are. And really that's the start and stop there, like hard stop. Like, it is the people. If Steve Jobs, I'll give you an example. If Steve Jobs walked in right now, it doesn't matter what he's pitching, you're going to invest in him. If I walk in, you're going to be like, get the heck out of my office.
What are some of those qualities about like a good team where you're like, oh, that's interesting? Is it work ethic? Is it just quick thinking, problem resolution? Like what have you seen?
Solving a real problem that real people are having, and two, have the communication, i.e. the go-to-market strategy that is able to get you in front of those people. I'm going to reduce entrepreneurship down. In my layman education, I can do this. Reduce entrepreneurship down to one thing, and it's solving problems. So a great team is one that is solving a real problem that is practical today, and that you have the marketing, the communication, the leadership, the internals, the externals to deliver to that audience.
We see over and over again, basically, probably every client we've got our hands on, the first step we noticed is their value prop statement and their taglines were difficult to understand what they did, right? And if you sat there and you really deconstructed it, yeah, it's tough.
The problem solution statement, That's really what I want to hear. The rest is we could figure it out together. It's like, how are you going to go to market? How are you going to capture that, et cetera, et cetera? Who do you need to execute on those? But if you don't have a good problem solution statement, next.
Yeah. And when you see someone that has to like give you a paragraph to explain what they do, it's over.
Next,
and like
next.
Yeah.
Lauren's background is in journalism, and one of the things she taught me early on was, every line you write is basically you're getting an invitation for someone to read the next line. Like,
well, think
you
about
are
how
earning
consumers.
that.
The last time I went and bought cereal, I hate cereal, but I'm gonna use it as an example because, well,
Wait, even Cinnamon Toast Crunch?
All of it. It's just. I'm kidding. Fruit Loops. Now, if you'd have said fruit or fruity pebbles or whatever, I might have given a little favoritism. But when you're in the aisle, or you're making any decision for a purchasing decision, most of it you're not sitting there doing calculus, and you don't care what the team did and their algorithms and all you tech people listening. I love you guys. However, I don't care about your great code. I don't care about your great software. I don't care what your unlimitless features. It's like, who needs that feature? Who told you they wanted that? Well, we did a test group of 10 and 8 people. I don't care about all the. We're going to make a decision in about a split second. What's in it for me? And and humans are pretty good at determining that in real time and really quickly. I think there was a study, and when I say that, I'm making that up. I don't know. I think there probably is a study, is what I really mean to say. Is that I think we got about 3 seconds. Yeah, it's like we got about 3 seconds, and that's about it. What am I saying? This is a verbose way of saying I don't need a paragraph.
Yeah.
Yeah, it's like
I
if
think
you
there's an
don't
issue
nail
with,
that second, or
I was gonna say, I
you
think
don't
there's an
nail
issue
that
with
sentence.
a lot of I think there's an issue with a lot of CEOs, a lot of co-founders, people who know the value prop, but they can't articulate it well to people who have to talk about it all the time.
CEOs in my world, I'm gonna say an unpopular. I swear, you guys, this is gonna go viral for the wrong reason. All these one-liners that are counter. However, I think CEOs are just great motivational speakers. If you can't communicate, you're not a CEO.
Yeah.
I'm gonna get shot for that. Who's this redneck out here offending off CEOs?
I think you're just saying what a lot of people potentially agree with. I think there are a lot of great CEOs who can be good operators, but a lot of them, to your point, should be great, are great cheerleaders. And if you can't do that, then
I think a great team, there's 3 people, and Alex, don't ask me to repeat his last name, but he's a great guy in sales. He's like the Gary Vee of marketing, but he does it with 𝐼𝐫𝐬𝐫, or the founder of acquisitions.com. Great guy. He gives a ton of great advice on YouTube. People should look him up. But he says that all great teams have 3 essential functions. You have the operator, you have the rainmaker, and I forgot the third one. But it's a CEO, at the end of the day, you need to paint the vision. Whatever the vision is. Not only that, go one step further and communicate into the micro with your team their lane of that picture, of that vision. Give them the ownership and have them see and own whatever it is of that total vision that you're painting. And when I say painting, I really, again, that's an analogy for your communicator.
Yeah.
Either you're communicating to your investors, fundraising, or you're communicating to your team to get the job done. But either way, the CEO should be talking.
Yeah, I think that makes sense. And I think when you look at corporate America, we've gone through this quite a bit, and we've kind of come to this conclusion that it's not even the most capable people that get promoted through corporate America or have the most illustrious careers. It's the people who can communicate the most effectively.
Communication, man. It's a strong, and as we talk, I hope we pivot into AI, which is back to my personal, you ask who has the success. And me personally with investments, it was with an AI enabled. That's a broad statement. But as we look at AI, and you start to distinguish, well, what is intelligence? One of the things that we learn is that language is a very important piece in our human history. It's like dogs; they can learn maybe 20 words, maybe, and then maybe you've got a smart dog that learned 22. I don't know, but the point is they don't have the facility, they don't have the capacity for language. Now, where am I going with this language? Language being a distinct thing in our intelligence. And the byproduct of that being, hey, we can communicate to each other. Not only that, we can write things down. We can take that language further. But it's like, if you can't communicate, you're failing a fundamental human element. You've got to get it out. You've got to get it out in a way that's understood. In other words, don't talk like I'm talking. Be to the point. and get your message across.
So yeah, we'll get to AI at some point, and
that was
but
a
I think,
plug for me to try to pivot there, but
yeah, we're walking our way there. So
they've got a method.
Basically,
they've got a method.
So why don't you tell us about your experiences with AI? No.
I didn't see that coming. It's a great question, Derek. My experience with AI is, again, I stumbled into it. I will say that in my 2000, my early 2010s, when I was again being essentially a lackey for a equity fund, I got tired of hearing CTOs and people like Derek that were very tech engineered telling me what a great investment was. Now, what the listeners need to hear is I have a huge ego, and my ego to the point that I decided to go back and get a computer science degree so that I would know not just the finance, but I could understand holistically what a great tech is. What that led to organically is a natural interest, a natural curiosity in artificial intelligence and AI enabled ventures. And where it led to professionally was, wow, this is a booming space, AI enabled. And I want to backtrack and say academically, we have at best dumb AI. Siri is not intelligent. She doesn't know language. She doesn't have, she's just a voice recognition hooked up to a dictionary. That's not exactly intelligence. Like, she doesn't know what she's saying. She's repeating. It's called regurgitation. Yeah. But anyway, what I found is there is, especially within automation, and that goes across many verticals within software. If you can take what is a robotic function, something that's over and over and over, something, and I won't say robotic, I'll say algorithmic, just every time it works like this, then to automate that. And every industry needs to be doing that now, and they pretty much are. And, as an investor, it's like, hey, where are you startups doing this? Hey, are you making something faster and more efficient and at less cost, which is what AI does, than human operators? Now, the counter to that is, Jason, you're firing people. You're getting people. It's like, no, well, they can get, their jobs change. It's not firing them.
Yeah. We look at
technology has always done.
Exactly.
As technology.
I hate that argument. It's like, well, AI is displacing. Yes, we need a more educated workforce moving forward, period. The flipping the burger when I can get a robot to do that function is, well, I'm going to do the robot because the highest cost of production is usually labor. So it's like, and the robot can work 24/7, doesn't call sick, doesn't take holidays, doesn't get into fights with other robots. So I'm going to take the robot. However, now I got to have somebody to work on that robot.
Yeah.
Right.
Yeah. I mean, get robots fighting is pretty cool. Like, that's a cool genre of entertainment.
Well, that's like both self-awareness, I guess, and then them like having their own initiatives that don't align. Right now, the argument is, do they align with human values?
Yeah, so we don't end up with Terminator. But I think, like, to the point of automation,
science
it's
fiction. Like they love to take that narrative.
It's so good. But it's like, is it rules based and is it repeatable? If it's rules based and repeatable, you should automate it, right? And we see
Derek,
pretty much all the time.
You should soundbite yourself, man. Take that and put that in a commercial.
We try to use it with customers quite a bit, because the other piece of that, not to get too professorial, but a lot of the things that people are doing that are rules based and repeatable are unnecessary. So really, is it necessary? Is it rules based? Is it repeatable? Like, those three items are the three things to say, okay, I can put a robot in charge of this. I can put a computer in charge of this and get probably a more effective, better result, and then just have the human audit it. We see it a lot. We see marketing data is big there, because people don't even realize that a lot of what they're doing is repeatable, is rules based, right? And it's like, okay, well, write down a list of how you're doing that.
Funnel is creating a process that, hey, you do this, and it's like boom, 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 boom. Automate some of that, if not the whole funnel.
Yeah, and so much of it you can, right? I think, like, when you look at a lot of the email flows right now, I think a lot of people that aren't in the marketing space don't realize how much of that is algorithmic tree derived. It's like, if this happens, then you get this email, then you get this email.
If this, then that.
It's pretty wild. And the more we get behind the curtain of it with tools like Klaviyo, the more you see, like, wow, like, oh, I didn't open that email, so I got this one because I got put into a different flow, and I'm a different level. I'm no longer considered a prime person for conversion. I'm now in the consideration end of their funnel. But when the people realize what type of rules-based things they're doing every day, they can start seeing what is the highest value things to offload that gives me more of my time back to do more stuff.
Precisely. Like you could sit on podcasts while my emails are running out right now and people are going in different funnels. But what am I doing? I'm sitting talking to you.
Yeah.
My emails are running out just on clockwork.
And I think like a good analogy of that, to your point about people like being afraid of firing people or losing jobs, it's like picking corn by hand versus getting a combine harvester.
Precisely.
Right?
That's exactly what's happening.
And it's it's really fascinating. We see a lot of abuse of AI. Like, people will be like, we need to deploy AI, and it's like, okay, great. What are you trying to accomplish? Like, trying to start back at step one of like, what is your real goal?
That has to do with like that argument with digital transformation. It's like, that's not an automatic thing. It's like, where are you trying to go? Back to painting that vision.
Yeah. Yeah, and it's tough, man. It's really tough to do, especially when people get tied up in buzzwords.
Plug for your business model canvas. I want to say, because I have, I know it's copyrighted, and I have definitely broken that like 18,000 times.
No, it's open license, man.
I share it with every single startup and founder that I've met since our previous year ago conversation. Your business model canvas, I think, solves a lot of these problems, not just within the marketing and the automation, but keep it the whole picture. It's like, where can we do what, how can we get it done? And first and foremost, are we solving a big enough problem? This is an impromptu plug for Derek's business model canvas. For anybody listening, please track him down and get that thing.
No, we appreciate that. But Lauren and I took something from a company called Strategizer. It's got an open license, and then we rebuilt it. And we really focused on what's the problem being solved, what activity has to be done, what's your value prop, what are your market segments, and what that flow looks like.
Like the piece you and Lauren have added, I think that is the business model canvas is great and exceptional. Yeah. But compared to your little tweaks, I'll give it 8 of 10 stars. Or I'll give it 4. Whereas what you and Lauren have completed is the 5th star. It's those little details that will help ultimately, whether you're trying to get funded or fund yourself. But it's going to help your company actually get a success. Meaning,
I think
deliver.
I think so, and I think the top part of the canvas, we'll link up to it in case anyone wants to look at it. But it's like, what problem are you trying to solve? Who's already there?
It's there. Go find it.
And one of your pieces of feedback was, how can we make it more linear flow so people that don't have the knowledge base can execute on it simpler? So we've been like reworking it into a one-pager. So we're going to do that. But I think like people don't really truly understand the problem they're trying to solve. They can't in one sentence say the value prop. And we end up with a struggle of people really struggle with who their market segment is, right?
Yes.
Well, they'll be like, it's everybody.
Your audience.
Yeah, it's like, everyone's my audience.
Everybody's my audience. It's like, oh my God, no, get out. Get now. Don't pass go. Don't collect 200. Get out. In fact, I'm going to sue you for the time you've just wasted.
Jason, when you've given that to companies, what have they been able to fill it out easily? They look at me
with deer caught in the headlights.
Okay.
Like, what in the absolute have you just handed me?
Yeah. But does that help weed people out, or does that do you work on that with them, or what is the next step there? How do they?
What I look for it when I'm handing them that document, brother, and I do it in a way. I do. Wow, we're getting very very elementary here with the grammar.
It's early.
I do it right away that I can see them, whether it's in person or whether it's virtual like this. I want to see their reaction because I'm looking for. Again, this is not science, but I'm looking for curiosity. It's like there are 1 in 10, not even that much, probably more like 1 in 50 that they'll see that canvas like, shit, that is exactly what I've been looking for. And then there's the other 49 that are like, what in the absolute, why are you giving me homework? You're not my professor. It's like, get out.
Yeah.
It's like, well, I'm curing cancer. Get out.
Because at the end of the day, it boils down to any consulting company will break a problem down into 2 pieces. What's the revenue aspect of it? What is the cost to deliver that revenue? And then just rip down that decision tree. And if you don't know, like we end up in a situation a lot where people don't know their acquisition cost of a customer or the lifetime value. So they don't know what it costs to get that customer into the door. And then they don't know how much revenue that customer is worth to them over a year.
If
And
you don't know that, then I would argue that you don't, not quite in business yet, because I think business product, once you prove the concept,
Yeah.
you prove the idea, and you get product market fit. Now these are big assumptions, but you get there. That product market fit is saying that you can plug and play in marketing. It's like, I have a system, I can throw X dollars at it and I get Y back. And you've got it that algorithmic, which plays into how do you get I could give a whole series on what I would like to call being capital efficient, or the capital stack. Another VC wrote about this. But talk about how once you get marketing, once you have that system, that marketing system, it's like, hey, I can put in X and get Y back. It's like, well, now you've got options for efficient capital. And for too long didn't read, for those just tuning in, stay away from VC. It's like that should be your last alternative, because VC and private equity are going to come at you, and they're going to dilute your company, and I'm taking ownership. Whereas if you have that type system, marketing, you've got your marketing down, you've got your audience identified, and you know how to reach them, and you've got that client acquisition cost nailed, like, hey, plug in X and get Y back. Then at that point, you could look at, lending, debt lending. You could look, because, hey, if I for example, take $100,000 loan in the business and fund that and put that into the funnel, then you're getting more back, essentially. Yeah. Or take accounts receivable, hey, my invoices, that'll start being financing, or, whatever the case may be. I'm giving loose examples. They're terrible. I'm telling people to basically get a loan. That's not what I said, but it is what I said. I hope
if you have a mechanism, if you have a mechanism to turn that capital into more cash, then debt financing is a good idea.
Absolutely. There you go. Thank you, Derek. Thank you very much. That was beautiful. That was poetic to my essay.
Before we start talking about that, I am curious, just because I've been thinking this whole time.
You scare me when you ask questions, Laura. You're like the graduate level questions over here. And I'm failing undergrad.
I don't know. Your answers are impressing me so far. So,
but you just got a low bar then.
No. This is one of my favorite interviews. You keep me laughing the whole time. So
good. Well, call me a spiritual entertainer.
Oh, that should be on your business card. I like that. So how has your background? You said you got out of the military when you were 2000. It was 2010. Mm-hmm. You were picky. You said your ego was huge, but you were saying no to all of these offers. What about your background made you perfect for where you are today, or how has it helped?
Coachable. I'm always looking. If I've done anything, it's because I've had a great teacher, and if I failed, it's because I'm looking at the answers in the mirror. That fundamental belief, which you could say comes from the Marine Corps, is instilled in us, is what's gotten me here. The lesson, anybody listening, get a mentor. And not just any mentor, actually take that back, any mentor. If they're an actual mentor, the point is they're going to be able to project you in a way, whether maybe not directly. You don't have to go to them and say, hey, what do I need to do in my future? Will you put me in, where I need to be? Not necessarily the case. However, if they're a mentor, that's exactly what's going to happen. At least that's what's happened for me. I didn't choose any of the firms I went. I just stumbled into them, as you accurately reiterated, that I stumbled in with a big ego. And when I reading into that even further, I came from the Marine Corps and Intel. Getting out in DC, there was no shortage of jobs, but I didn't want to work in Intel. That was all I was getting. So I fell into finance. Great. And my first company, again, the managing partner was as much as I dislike that firm now itself, and I am against everything they stand for, I have nothing but gratitude for the mentor, for the managing partner, and what they were able to open the doors for me. And what were those doors? Well, I listened. I was curious all the time. And it's not that I got there early. It's not that I stayed late. It's that all day long I was asking questions. Like, how can I better? How can I? What is it that we're looking for? What is our value? That what makes our money different than, say, the next investor, et cetera, et cetera. I'm trying to learn those key competitive differentiations on ourselves, but constantly learning and trying to add a better value to our clients.
I think you also said something that was interesting, like accountability. You said you look at yourself in the mirror and you're like, if anything goes wrong, that's on
look in the mirror.
Me.
And this applies to everybody, whether they have that conversation with themselves. I don't know how much into psychology and, reading Carl Jung and the like, they do on their personal time. But I will tell you that if you fail anytime, the answer is in the mirror all the time.
Yeah.
I've just had enough, Carl Jung, you read his Red Book one time and it's terrifying, but you realize, you are the captain of your ship. Now, if you do great, it's monkey see, monkey do. Another monkey showed you.
Yeah.
If you succeed, thank a teacher. If you fail, well,
Blame yourself.
Blame yourself. But I don't mean don't get down in existential depression. But you are the product of what's failing.
Yeah.
You're the what can change.
In identifying when something's going wrong or no longer working, and you need to make a pivot. That self-actualization journey is tough.
That's
man.
a way better way of saying it than what I'm saying it. So you're selling it. I basically turned people away. No one's going to read Carl Jung now.
It's actually pretty good stuff. But over the last like 10 to 12 years, what has changed the most for you in the finance journey? Like what has happened in the industry and the world that's
investors are becoming largely risk averse. And good times, what I found out now, I'll cite in current settings, in good times, investors make money. In bad times, they gain assets. That's what I've learned. It's like right now, it's not about, let me talk two-sided here. A while ago, I said investors are about making money. Well, that's true, except now in a recession, the disclaimer is it's about making money that is assets, that is hard assets. Because, for example, half of my lending business is to real estate. That's a big bulk of, and why? Because, there's a hard asset there. It's easy to lend. If you fail in whatever you're pitching, I could take your house because, that's a hard asset. It's like, and investing in private investing, sort of the same way, a little bit different because you're dealing with businesses, not real estate. But it's like, hey, less of the idea, less merit, and more metrics. I might have invested in you pre-seed with your great idea to cure cancer. Now I need to see the proof. I need to see, your 10 studies. I need to see your patents. In fact, I need to see you already with about $1 million a year.
Yeah. Have these high profile just explosions like FTX, Theranos and things like that impacted your space at all?
No,
but it doesn't make you think
those
about the person sitting across.
FTX was a nightmare train wreck to happen for many reasons. How it got as big as it did, or the problem as deep for as long and unseen, that's a failure on the internal players all along. Again, they need to go look themselves in the mirror. That's not a market problem. That's not a macro problem. Of course, the anti-crypto world's like, yeah, see, I told you. And then the crypto fanatics right now are being quiet because, there's a huge case in the news on the headlines. However, those things will always happen. It's like there's a run on the bank. The market's corrected itself because that was a terrible company.
Yeah, no, we agree. For us, when we see stuff like that, we're like, oh man, we hope that this doesn't create momentum against emerging technology, right? Like that's always our fear. Anytime someone does something
what I'll say is to the investors that are rich, right now is the time to get involved in that space. It's like, when everybody's turning away everybody says it, but nobody does it. See, going against the crowd, going against the grain is where you're going to find, your gems. Because if everybody's over there, there's no gems left. It's like right now when everybody's saying, get out, get out, get out, for that one investor that's sitting there listening still to this space, you're going to find a gem.
Sure.
Your probabilities increase. I won't say you will, but say your probabilities increase because, they have less people to go pitch to.
So on that note, what do you think the future of the space looks like? Not just crypto, but venture investing in general, debt investing in general, your industry and you next 5 years. What does that look like?
Well, I'm going to go broader, and I'm going to cheat because I've actually written about this, and I'm copying it from a TED talk, but I've pulled together a few. But it's like, where do I see the future going? In all spaces, in AI and broader, you could say, quote me here, I see us going into an augmented age. Now, mind you, here's where I'm going to cite my little clip that I've written for that question. It's like over the course of the next 20 years, more will change around the way we do work than has happened in the last 2000. I'm a firm believer of that. Let me say it again. There's going to be more change in the next 20 than we've seen in our lifetime, and we've seen a lot. In fact, I believe we are at the dawn of a new age in human history. There have been, if you'll cite it, there have been four major historical eras defined by how we work. And the key thing that to listen to here is the length of each of these ages. Again, these ages defined by the way we work. And again, the gem here is the length. The first was the hunter-gatherer age, which lasted several million years. Then we went into the agricultural age, which lasted several thousand years. And then we went into the industrial age, which lasted a couple centuries. And then we are in present. We are in the information age, which has lasted a few decades. And now, to the question, I believe we're on the cusp of a new era as a species. And that, to me, is the augmented age. In this new era, your natural human capabilities are going to be augmented by computational systems that help you think, robotic systems that help you make, and digital nervous systems that help you connect to a world far beyond your natural senses. And what I mean by that last one, connect, take, for example, like the blockchain, and you blend in like augmented reality. If you're wearing like Google glasses and you look down at this banana in the grocery store, you can tell where that banana came from, what the farmer it was picked from, what time it was picked, how long it spent travel till it got to that store. Now, we've never had that kind of relationship with the banana that we bought in the supermarket, but that's where we're headed, and with every single item. I think we're going to see a world that's moving from things that are fabricated to farmed, constructed to grown, isolated to connected, extraction to aggregation, and obedience to autonomy. As playing on this, as I'm citing the augmented age, and again pulling that from others. Thanks to our augmented capabilities, our world is going to change dramatically. We're going to have a world with more variety, more connectedness, more dynamism. My enunciation is terrible. More complexity, more adaptability, and of course, more beauty. And to me, the shape of the things that we're about to see are unlike anything else. But it's what's shaping this augmented age is our new relationship and partnership with technology, nature, and humanity. And to me, here's the feel-good conclusion. That's a future well worth looking forward to.
Yeah, I would agree. I think we agree with basically all of that.
Basically, what do you mean basically?
Well, I just think there could be an inverse of that. Don't you? Can this technology be used for control, for where you talk about like autonomy? Could it not be used for like tyranny or control if it's in the wrong hands?
Absolutely. Will it? The will of the people, I'm sure that's there. But we the people are always in mass. I mean, we're always in charge, and we get what we allow. I don't think we're going to allow that. If we do, we won't allow it for long.
Yeah, we hope so. I hope you're right. And when we look at things, when we look at AI,
best when it's undermining, when you're in the control that you're speaking of, which is when you're really getting into your governments and your private even private companies having centralized control. Technology at its best when it's undermining that.
And we always look at, anytime we look at future stuff, we look at the utopian view, that libertarian view of decentralization. And we really love it.
My handle, plug everybody, go check out the Radical Libertarian. That's me.
Radical on Twitter, where?
Everywhere. Anywhere there's Radical Libertarian, that's me. I'm the author. I am the Radical Libertarian.
In that view of the world, we want to see. What we don't want to see is Brave New World 1984. When I was running an IoT team.
You don't want to see that. We live in that. What do you mean? Look outside.
We don't want it to get worse.
There you go.
That's basically where we're at. And so when we were running an Internet of Things company, we made everyone read Brave New World in 1984. It's like, look, you are connecting all these devices, all these sensors. Don't do this. Like, you have to be benevolent when you're deploying these tools effectively. And it's but it's fascinating. Like, we believe in a tomorrow that looks better than today. So we're just continuing to push down. We maintain our levels of hope that it's going to be okay. But
those systems can be like, there are times like when I mean autonomy, I'll give you an example. Environment, we suck. Like our species is the worst for the environment, and all the in fact, it's really about 5 companies. You going out and buying, getting rid of an electric car, and recycling. That's great, but that's very micro. It's really a bulk of the problems lie within a few select that really abuse the environment. However, my point is across the board. Take, for example, I'm a beekeeper.
Oh,
What's
cool.
killing the bees, we know, is the pesticides in the sprays on monoculture. Now, France, no one's quite as republic as France. Now they went and lobbied against the, and I mean they threw hives at their Congress and like threw them on fire, and they're the only country so far that has banned these pesticides. We can't because pharmaceutical companies and the government are one and the same. In fact, if you follow the FEC, pharmaceutical companies are the #1 donor to Congress, and I only know that because my spouse is FEC. If you follow who donates it's if Congress was NASCAR, their biggest sponsor would be, Bayer. They're the equivalent, not to throw Bayer singularly under the bus. It's like, hey, you guys are putting out pesticides that are killing our bees. Now, the reason I bring that up is because bees are indicative of our environment. Why? Because they're everywhere and they've been around forever. If there's anything to happen in our environment, they're a good trigger. So why are they all of a sudden dying in mass? It's like, oh, wait, the pesticides. The nanonectoids, whatever, the scientists listening, nanonectoids that are in the spray, what they do is they cause the baby brood to lose their sense of direction. All of a sudden, the beekeeper comes to the hive, they're all gone. There's no sign. We call it colony collapse, and it's multiple other things that came from it. Now, why am I bringing up environment? This is where AI would, in an autonomous, like, we have authority over you but in a benevolent way. There are certain things you're not allowed to do, and it's not a government or a private company saying it. It's AI saying, don't. They put the AI in charge of saying, this is your allowed of emissions, and if you don't, I don't know how they would monitor it. Again, this is a future thing. But I see that when I say autonomy, I don't mean it in a government or a private business entity. I mean it in a AI, take care of our environment. AI, be in charge of it. We're terrible at it. Everything we try to control, we just cause a bigger problem. So it's like, AI, can you, I'm personifying the AI, but it's like, can you be in charge of the government? Because we can't. We blue, red, or libertarian, we can't handle it.
As long as it doesn't go Skynet, I think as a utopian view, it could be interesting.
Yeah,
that's
a
couple
hack
movies.
Skynet. Next thing you know, our clouds are purple and methane gas is coming everywhere.
Arnold Schwarzenegger gets off a motorcycle with a shotgun. It's a whole thing.
All right, now you just gave your science fiction writers are like, yes, Derek, yes.
Yep, this is the one. This is the next movie.
Setting him up. Well, my last question, not to scare you, but we warned you about this one in advance. So if you could have dinner with either the 18-year-old version of yourself or the 25-year-old version of yourself, what advice would you give them knowing sort of what you know now?
It's going to be tough. It's going to be hard.
Yeah. And either age?
Either. Doesn't matter. Look back. I'd look at myself at 18, 25 and say, it's going to be hard. It's going to be straight uphill. You're going to lose a lot of people. You're going to lose a lot of friendships, and you're dumber than a rock. Just accept that and have fun with it.
Yeah, I think that's probably really solid advice. I think some of the themes we've been getting lately are appreciating the ride and the journey. I think a lot of us don't do that very well. And then when we're young, we have a lot more gaps than we realize.
I have a quote on this. I got to find it. But I'm going to quote Hunter S. Thompson, which is I kind of, as Arthur, kind of embody his Gonzo style in that I insert myself. There's that ego again. Insert myself into things. And the journalist can appreciate that because the best way for me to write is, well, I'm just going to make myself a character. But he has a beautiful quote, and I think and it's what I'm trying to capture if I'm talking to my younger self. And his quote is, life should not be a journey to the grave with the intention of arriving safely in a pretty and well-preserved body, but rather to skid in broadside in a cloud of smoke, thoroughly used up, totally worn out, and loudly proclaiming, wow, what a ride.
So I think on that note, that's probably a really great stopping point. And Jason, where can we find you? We got the Radical Libertarian. We got LinkedIn. We'll put those links up. We've got your webpage for Moonshine Capital, which is at distilledfunding.com. Is there any other place that you want people to find you?
Everybody listening, go follow me. All the things, all the links. It's at FT_hustler. I came up with that like an AOL chat room when those that had names. Terrible name, but when we first created a handle, I was like, full-time hustler. Now that's not as cool now that I'm getting a little older, but I'm sticking with it. So go follow me anywhere at FT_hustler. And no, I will link that up. Sometimes you can see I talk on podcasts.
We'll make sure we link that up and everything, and then we'll get that posted. But Jason, thanks so much, man. We really appreciate having you on. It was a lot of fun. Loved hearing your story, and we look forward to chatting soon.
Thanks, Jason.
Likewise.